Hong Kong is set to scrap its mandatory hotel quarantine, ending more than 2 years of strict COVID-19 travel curbs that have isolated the once thriving financial hub. A prolonged border closure has hit hard and left the city at a disadvantage in the region. And so this departure from China's zero COVID policy is a long-awaited decision. From Monday, arrivals at Hong Kong International Airport only have to monitor themselves for 3 days. CNA's Deborah Wong tells us more.
It's a massive step forward because up till now, Hong Kong remains one of the few places where international travellers still need to go through a mandatory hotel quarantine, pre-departure and on-arrival PCR tests. The stress of securing a hotel booking, the costs that went into it, was always a deterrent. But now, travellers can go about the city with slight restrictions. Now, for instance, they can enter restaurants only when given a blue health code upon testing negative.
以科學精準嘅方法去識別不同風險級別嘅人士，去減低管控嘅人數同埋管控嘅範圍，容許最多嘅日常活動同埋涉及嘅人數。
But more importantly, this decision signifies a departure from the dynamic zero-COVID policy the city has in alignment with China. That policy has been a linchpin to Hong Kong's own opening plans. We saw a slight shift in July when Chinese President Xi Jinping urged Hong Kong to step up its global competitiveness. And earlier this week, there was further confirmation when Huang Liuquan, the Deputy Director of State Council's Hong Kong and Macau Affairs Office, said that there was no contradiction between opening up with the world and the mainland.
So analysts say it's China's way of giving Hong Kong more flexibility to navigate the pandemic. Now, this also comes as the city seeks to revive its economy. Hong Kong slipped to the 4th place in the latest Global Financial Centres Index. And Finance Secretary Paul Chan said earlier this week that the city will record a deficit of more than $100 Hong Kong billion. Now, that's about $12.7 US billion.
This figure is nearly double the amount projected for this fiscal year. The government will be injecting more stimulus to boost the economy. But ultimately, Mr. Chan recognized that restoring cross-border travel is critical to economic improvement. So the announcement really marks a step in the right direction. As it is, Hong Kong has already scheduled major events in November to drive up the tourist dollar. And we're looking at the International Banking Summit as well as the Rugby Sevens. While a right move, one analyst said more needs to be done to fully revive Hong Kong's appeal.
If you really want to reboot air travel, you have to get rid of all restrictions. Get rid of testing, certainly get rid of quarantine. And then also too, even like the kind of annoying apps that you have to put on your phone. Hong Kong needs to move forward, on those areas.
One of the city's largest quarantine hotel providers said it's been preparing internally for the move, and it will reopen amenities like ballrooms, gyms and restaurants. But it recognizes that it will be a slow uptick.
It takes some time for other international airlines also to put back their flights. So we don't think there'll be a particular surge. We will see an uplift, of course, but for some airlines, it takes up to 6 months to reschedule a service. So the hospitality industry will be a little bit dependent on the airlines coming into town.
But if it's any consolation, Chief Executive John Lee says these measures will not be rolled back, hopefully giving the world confidence that Hong Kong is back in the game.
And whether Hong Kong can get back in the game as a financial hub, as Deborah puts it, is an open question. It remains a crucial centre for Asian deal-making as well as trading, but evidence has piled high since China's strict COVID containment measures that the territory has become is a shadow of its former swashbuckling self. Now, Hong Kong has just lost its crown as Asia's premier financial centre to Singapore in a global ranking list. That's primarily because the strict COVID curbs have led some of its brightest talents to leave. Now, more than a third of fund management companies had to move some or all of its regional and global roles from Hong Kong to other places. That's according to a survey by the Hong Kong Investment Funds Association, which polled 36 firms. Nearly 70% of the respondents said it was extremely difficult to hire and retain expats in the city. Almost 20% of them had offered hardship allowances to lure talent to relocate there. About 13% of the firms have cut headcount in the city, and 55% have added new jobs elsewhere. Now, Hong Kong's population saw its numbers fall by a record 121,500 in the first half. Meantime, losing the spot as the financial hub appears to have jolted the government. It issued a statement saying the government is focused on the city scoring a higher points rating than the year before and would strengthen its role as an international financial center. But that's not the only coveted status Hong Kong has lost. The International Air Transport Association, or IATA, says that Hong Kong has lost its position as a global aviation hub. Its chief, Willie Walsh, says that Beijing's strict COVID rules, and I quote, devastated Hong Kong and hit flag carrier Cathay Pacific hard. Mr. Walsh also said that Cathay Pacific is a shadow of its former self because of the unrelenting policy, and that it will be difficult for Hong Kong to regain its position as a global hub because other cities are taking advantage of the lost edge. Now, travel and tourism stocks rallied after Hong Kong scrapped the quarantine rules. Flag carrier Cathay Pacific surging nearly 3% at one point before closing 1% higher. It has been one of the biggest corporate casualties of the city's isolation.